Today is Monday 29th of January 2018. Market update, Dow Jones 30 index. Apologies for not uploading any updates last week. I was busy with other things. But this week I'll post a few updates and see which direction these markets are going to move. Now, here we are on the Dow Jones daily chart. We've had continuation patterns. Dow Jones had decent upside moves last week. The most important thing to emphasize here is, even though if you look at our indicators like the RSI, stochastics, they're in very overbought territory. But one thing I taught my students is don't ever rely on indicators as a reversal. More times than not, it can get you into trouble. And as you can see on this chart, I don't use them. The most important thing is, when trading off a chart, especially whether it's an index, a stock or a commodity, if there's very strong momentum behind it, which we know the Dow Jones has been having impressive upside moves, is to try and identify patterns, consolidation patterns, and a breakout of those consolidation patterns in the overall direction of the primary trend. So as example here, of late when the Dow Jones has gone into consolidation, usually forms a wedge and then breaks out. Here went into a bit of a sideways consolidation there. We had a hammer which presented the buy signal. I'll move that there. And then early last week we had it formed a wedge, it broke out, moved up. Yeah, interesting to note on the daily chart here is the Dow has transitioned above the 50 Fibonacci timing angle. As we can see previously, it was in the channel between the 61.8 and the 50. Now it's traversed above it. So ultimately the target could possibly be, it may want to project itself to the 38 at some point in the coming days or weeks, which would put it over 27,000, which no doubt I think that's the ultimate target they want to get in the short term. But that could very well, it's 38, if you understand Fibonacci laws and relationships, especially with GAN theory, 38 is a quant percentage of a 144 timing cycle. So upon hitting the 38, that could very well be a trigger for a meaningful reversal. We'll have to wait and see how that plays out. Because this is a live chart at the moment on IG, the Dow at the moment in the futures has come under a bit of pressure. Now, as I've said to a few traders, there's interest of the last few weeks. There's been interesting moves in the bond market. Bonds have been selling off, and for those who understand how bonds and the relationship between markets are, is when bonds sell off, the yields rise. And a bond guru by the name of Jeffrey Gundlach and Bill Gross, that experts in this field, said if the 10-year Treasury bond goes over 2.63, it really signifies the rally start of a bear market move. Currently today, the 10-year bond, US bond, is at 2.70. So there's continued selling in bonds, hence why, if we switch over to 5-minute chart, we can see we've had in the futures a selling pressure, but just recently we've seen some buys again. This will be interesting to see what happens if bonds continue to sell off. It may add more selling pressure to the Dow Jones, which will very well lead on to other indices. So for at the moment, I'm neither long or short. I just want to see how this plays out. Another interesting thing to note is the volatility index is spiking up. It's currently around 11.4. And if that maybe spikes up a bit more, we could see a sell-off. So even though I have this 38 target in mind, it may not reach it. It may want to go back test this 50. So at the moment, this is in a very interesting area. Ultimately, if you want to trade with the momentum, you'd probably wait for it to form a consolidation wedge like it did last week and previously, and then upon confirmation of breakout of that wedge to the upside, then you can take a long trade. So for the moment, it presents a non-trade in either direction. Just wait and see what moves come out over the next few sessions. I'll update that. I'll do an update on the Dow Jones later on in the week.